Hey guys, welcome back to IluMind. In the high-stakes world of finance, where fortunes are made and lost in the blink of an eye, Guy Spiers, the education of a value investor, stands as a beacon of clarity and wisdom. This isn't just another get-rich-quick scheme, it's a profound exploration of value investing, a philosophy championed by legends like Warren Buffett and Benjamin Graham. This essay delves into the core principles of Spiers' investment journey, breaking down complex concepts into bite-sized pieces for aspiring investors. We'll uncover the secrets of intrinsic value, margin of safety, and circle of competence, empowering you to make informed decisions in today's ever-changing market. Get ready to embark on a transformative journey that will forever change the way you think about investing. Embrace the principles of value investing, and you'll unlock a world of opportunities for long-term financial success. Guy Spiers wasn't always a value investor. In fact, he started his career on the cutthroat Wall Street, where short-term gains and aggressive tactics reigned supreme. Disillusioned by this culture, Spiers embarked on a quest for a more meaningful and ethical approach to investing. His search led him to the teachings of Warren Buffett, the Oracle of Omaha, and his mentor, Benjamin Graham, the father of value investing. Inspired by their wisdom, Spiers adopted a long-term perspective, focusing on identifying undervalued companies with strong fundamentals. Spiers' journey is a testament to the transformative power of value investing. It's a reminder that success in the market isn't about chasing the latest fads, but about adhering to timeless principles of sound investing. Imagine you're at a flea market and you stumble upon a dusty old pocket watch. To the untrained eye, it might seem like junk, but you, a savvy bargain hunter, recognize its potential. You get it appraised, and it turns out to be a rare antique worth a fortune. This, in essence, is the heart of value investing, uncovering the intrinsic value of a business, the true worth that lies beneath the surface fluctuations of the market. It's about looking beyond short-term noise and focusing on a company's long-term earning potential. Intrinsic value is like a company's DNA, its fundamental building blocks. By carefully analyzing factors such as revenue, earnings, assets, and debt, value investors can estimate a company's intrinsic value and determine whether it's trading at a discount or a premium in the market. Investing is inherently risky. No matter how thorough your research, unforeseen circumstances can always impact a company's performance. That's where the margin of safety comes in. It's your financial cushion, your shield against the unexpected. Picture this. You're about to cross a busy street. Would you rather cross with a comfortable gap between you and the oncoming traffic, or with cars whizzing past inches away? The answer is obvious, right? The same principle applies to investing. The margin of safety is the difference between a company's intrinsic value and its market price. The wider the margin, the greater your potential for profit, and the lower your risk of loss. Section 5. Circle of competence. Investing where your knowledge shines. Have you ever heard the saying, "Jack of all trades, master of none"? This rings true in investing as well. It's impossible to be an expert in every industry and understand the nuances of every business. That's why value investors emphasize the importance of operating within your circle of competence. This means focusing on industries and businesses you understand well, where your knowledge and insights give you an edge. Think of it like playing a game you've mastered. You know the rules, you've honed your skills, and you're confident in your ability to make winning moves. The same applies to investing. When you operate within your circle of competence, you're more likely to make informed decisions and generate superior returns. Section 6. Behavioral Finance. Taming the emotional roller coaster of investing. Investing isn't just about numbers and spreadsheets, it's also about psychology. Our emotions can often lead us astray, causing us to make irrational decisions that hurt our portfolios. Fear and greed are two of the most powerful emotions that can sabotage our investment success. Fear can paralyze us, preventing us from buying undervalued assets. Greed, on the other hand, can cloud our judgment, leading us to chase after speculative bubbles. Value investing teaches us to be aware of our behavioral biases and to develop strategies to mitigate their impact. By understanding how our emotions influence our decisions, we can become more disciplined and rational investors. Section 7. Timeless wisdom for modern markets, applying Spiers principles today. While The Education of a Value Investor was published in 2014, its principles remain as relevant as ever in today's fast-paced market. In fact, the rise of technology and the increasing accessibility of information have only made value investing more accessible to the average investor. With countless online resources, financial data is readily available at our fingertips. We can research companies, analyze their financials, and identify undervalued opportunities with greater ease than ever before. However, it's important to remember that technology is a tool, not a substitute for sound judgment. The principles of value investing, intrinsic value, margin of safety, circle of competence, should always guide our investment decisions. Section 8. A quote to remember. The Oracle of Omaha speaks volumes. One of the most powerful quotes from The Education of a Value Investor comes from Warren Buffett himself. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. This simple yet profound statement encapsulates the essence of value investing. It's a reminder that we should always prioritize quality over price. A wonderful company with strong fundamentals and a durable competitive advantage will generate sustainable returns over the long term. Don't be swayed by the allure of a cheap price tag if the underlying business is weak. Focus on identifying exceptional companies with a proven track record of success, and you'll be well on your way to building a winning portfolio. Section 9. Conclusion. Your value investing journey begins now. Congratulations. You've now been exposed to the core principles of value investing as espoused by Guy Spiers. Remember, this is just the beginning of your journey. There's a wealth of knowledge to be gained from The Education of a Value Investor and countless other resources available to you. Embrace the principles of intrinsic value, margin of safety, and circle of competence. Remember to keep your emotions in check and to always prioritize quality over price. The world of value investing awaits. Take the first step today and embark on a rewarding journey toward financial freedom. Thanks for watching. If you enjoyed the video, do me a favor and let me know in the comments. You can also let me know which book summary you'd like to see next. See you next time.